TFNN, educating investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman on this 18th day of May, Tuesday. We're looking at the Dow down 85 at 34,242. I had mentioned to subscribers to my opening call that the next 2 days, that was on Friday. So I said over the weekend in my overview, the coming couple of days are really important. There are a couple of patterns we're looking at here. There's a ChapmanWave falling axe formation, and we're out of it on the side, but I usually am very cautious. I actually move that line to today. I want to see a decisive move. I don't want to just see sideways. Sideways, you're always going to get out of a declining or rising trend line. You want to see action. So this is very important. Why? Because you're sitting on the 14 and 9 period exponential moving averages in the Dow, and there's a potential for a V-shaped pattern. But if you stall for a couple of days after such a spectacular turnaround Thursday and Friday, you should see some follow through by at least today, Tuesday. Well, there's the pattern that I call the H pattern, the dreaded H, because if it takes out the left side low, you can go a lot lower. But you don't know it's going to do that until certain action occurs. And that is, there are three basic patterns I look at just in terms of the lines that I draw: straight line up or down, cup formation, arch formation, a combination of each one. In this case, it's 1 and 3, straight line down, then an arch. If that arch fails at a peak A or a B, and it comes down and it takes out that left side low, you can go a lot lower. Same thing on the upside. If this reverse Y pattern takes out the left side high, you can go quite a bit higher. So with that in mind, what we're looking at here is, yes, no big deal. Down 67 cents after a move from the 33,587 level to 34,000, was it 380? 34,454. That's a big move. So now what we're looking at is you can go sideways, but sideways is usurping energy, much needed energy for the upside. However, if there is a break to the upside and the Dow starts to trade above 34,500 and actually closes above 34,500, that is very impressive. That's very good action. The technicals are not good, but the 9-period moving average over the 14-period moving average is suggesting there's still internal strength, and that's really important. The weekly chart, we'll see where it closes on Friday. There's nothing to discuss here. So far, everything's pretty good. And the monthly chart, same thing. Look at the S&P. I'm going to do these very quickly because I spent a lot of time yesterday on this. S&P, same thing. It's got this declining trend line, the falling axe formation that is like a cone, declining, expanding cone with lower highs and much lower lows, and it tries to break out to the upside. Just make it simple. 41.90. Look, the high on the 14th, that was 2 days ago on Friday. The high was 83.19. I would say 41.95, 4,200. That's very impressive action if it can get there in the S&P. Otherwise, you're going to be looking at an arch formation, and the arch formation only kicks in really if it starts to go below 41.20, and it's way above that right now. So those are the parameters to look for. And in the meantime, back at the ranch, let me just say that the QQQ, very impressive that it's up a little, not a big deal. It's not even above the 9-period, this pink daily 9-period exponential moving average, but it is holding pretty well, and that's a good sign. I say to subscribers, I'm seeing some good strength here. I'm seeing some rotation into certain sectors that have been beaten down. I like that. We took one today, a long position, and it's in an area that I couldn't believe that in all these months, it just kept going lower and lower and lower in an era where this particular sector seems to be so important. Anyway, we'll see if this is going to work out. So far, so good. Hey, days young. You never know. So the QQQ NDX 100 monthly chart, the weekly chart is definitely in a sell signal, not a sell mode, but a sell signal. And remember, we had this ChapmanWave Roman candle. And if we trade, we touched it, but we didn't actually trade for very long. Underneath 322, yesterday's low was 300 and, I think it touched 22, but didn't break it. Oh, it was 321.45. So it's going to have to, it needs to close under that. And that would say, that weekly chart says, yes, we're going to test the 316 round number low that was made 4 sessions ago. All right, let's get out of this. And we want to look at the IWM, and we've got out of it in that way as well. IWM, nice action today up $1.12, 222.40. I like this. I think we're still long the IWM from the 173. It's taken a little bit off, but we're still long position. And I'm going to try to hold this. Why? The longer we can go in this oval pattern, the better it is. It's usurping strength to a certain extent, but it's also using up the weakness that we've been seeing. So this oval pattern, very important. 2 Roman candles. The week of the, that was March the 26th. And last week, we'll see what happens. I can make it real simple. If any day there's a close below 216, we're at 222 right now. A close below 216, that would suggest we're going to take out that low and we're going to have an arch formation, not a one-to-one to the upside. Just make it simple. All right, question I had about Bitcoin. Why was I so negative on Bitcoin, even though we're long? Because I said weeks ago, there's a really good chance that the high that was made on the 16th of April at 65,520 at a peak D, when I did the alternate count a couple of days later, I said there's a really good chance that this is a technique that has a ChapmanWave unconventional flat base restart, and it should go to this low right here, and that is 45,175. We're trading at 42,990 right now, down 1,070. We're long from the 12,400s based on the Bitcoin. You're actually long the GBTC at 1240s, 2 different positions. And we've taken lots of gains all the way up. But now we are just holding it as a small core position because we're in so low. I think this is a real problem. Now, the monthly chart is at a peak C, if there's no new high this month. And in the Bitcoin investment trust, it's only a peak B. So longer term, I think there is a play for the Bitcoin. But shorter term, what I'd said, I believe that money from speculators would be going into gold rather than staying in Bitcoin. And one of the positions I discussed when it was an IPO, and I said, I don't like it. I had a lot of questions about it, Coinbase, whatever it is. It came out, I even had it live on a 1-minute chart when it came out. I said, I just don't think this is going to go anywhere. It opened at 381 round number low, made a 310 round number low, skyrocketed to 429.54, and that's been the high. And people had said to me, what if we want to get into it? Where would you get in? I said, I wouldn't touch it, but if you want to get in, I'd say 325 to 295, and then 275. But personally, I don't like it at all. There it is at 245. Well, not good. I'll be back at the moment. Basil Chapman, Dow's down 86, S&P's down 5. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Yes, we've got a lot to cover, but we have a caller on the line, and I'm going straight to the caller. We've got Michael in Paramus, New Jersey. Hi, Michael. How are you?
Hey, good morning, Basil.
How you doing?
Good, good. I wanted to ask you about Lordstown Motors, RIDE. Yesterday, they came out with a report that they're going to be having Lordstown Week from June 21st to the 25th. And I wanted to get your opinion on the chart. I know there was a 668 bottom. I wanted to know if you think that the chart is in a reversal now.
So, folks, we're looking at RIDE, R-I-D-E, trading at $9.27, up 87 cents, up 10%. This is Lordstown. This is in the electric vehicle area. It made a top at 3180 back in, I think it was somewhere around October of last year, plummets down to the 12s actually, then soars back up, makes it in the rectangle formation. You can go just under, right on, or just above the previous high. And if you give back more than 1/3 to a half of that gain, you got to be careful. You can take out the low, and that's what it did. It went right to 3180 was the last high, 3157 was the next high to peak D in the ChapmanWave methodology, and it plummets down and it takes out the low that was made in October last year of $12.80, and it went to a low, as Michael says, a little double bottom low, $6.69 on the 11th of May, and $6.70, huh? 669 and 670. So a penny higher 2 days later. And now I saw this go by on the ticker yesterday, and I thought, this is very interesting because that was a really strong candle. I have a problem with these strong candles because if it's one candle and the very next day it doesn't make a new recovery high, in other words, the high of the previous day is not taken out, but in fact it falls to about a third of the whole, pulls back a third of the whole gain, that's usually a negative. This is very positive. So on just purely on a rumor, whatever it is, that people think a whole bunch of things are going to happen, I would say this is in play. You say, so how many days to go before this special event?
It's the 21st of June, so we're about, I would say, 3 to 4 weeks out.
If it was in about 2-3 days' time, I'd say, yeah, this is a good play just to on all the speculation. You know what I'm going to say? I would consider that this in this particular environment right now, this is the kind of thing that has some play. It could have some juice to the upside. Got a lot of resistance in the 1030s, 1050 area. Do you have any position at all?
Yeah, I've been adding because this has been a stock that I feel has been a negative, target of Hindenburg Research along with other big media outlets. And it just seems that, this September production date is the only reason why people are knocking the stock, along with some other things.
So all right, this is what I'm going to suggest to you. It's really for you now do I add to the position? Is that correct?
Yeah, I was wondering, would it be smart to add on the way up?
Yes.
It seems like I saw the candlestick yesterday, and today, it seems like the EV sector is kind of bouncing back after being absolutely slaughtered for the past 8 weeks.
Oh, yeah, the charts look very, very ugly, but the daily chart looks like it's improving. The stochastic's rallying with the on-balance volume. Relative strength is improving. MACD is improving. But I'm going to suggest this position needs to have a stop. If you're okay with a stop, and I can see that you're prepared to give it a little bit of room, so it's at 947. The pink 9-period exponential moving average is at 826, so that's like a 12% risk. But I think I'm prepared to say to you, if you will tighten up the stop for if it's able now to rally from where we are at $9.45, I would say for every 50 cents that it rallies, I would raise the stop. Initially, I'd have a stop on the day. I'd probably want to have it at about 8.85, 60 cents, about a 7% risk. Every 50 cents, if it's able to do that into tomorrow and the next day, I would raise my stop accordingly. And I would treat it as a trade because the weekly chart is just terrible. But this daily chart follow through right now says there are enough people believing in it. And I think that if you can treat it as a trade, in fact, I would ask you to, in your mind, I know it's very hard to do, treat it as a separate entity. Treat it as if you had no position and you've called me in fresh and you said, what would you do? And I would say, because they're acting so well right now under these market conditions, if you put a fairly tight stop, I would say go with it. And I'm not sure I would say to you, add to it on the way up. Because you've already now have to say you have a position. I don't want that to interfere. Treat it as a very special thing, a separate thing. So you're going to go in right now, but you've got to treat it as a separate, and don't treat it as something that's going to make up for if any of your position is in a losing position. Don't think of it as making up for. This is completely separate. You asked me the question. I'm answering the question as if this is a brand new buy. But if it's a position that has to be buying on the way down when that wasn't your real plan, that's something completely different. You know what I'm saying? I know it's hard.
Absolutely.
Yeah, try to think of it separately. And I'm just telling you right now that if we don't know, but let's just imagine that there's enough news that is going to be covered with some concrete evidence when it finally comes out. This is a stock that should break the 4 days of resistance at the 1050 area. So if this is going to work, it's going to be one of those things that's under the radar that suddenly becomes highlighted, and then all of a sudden you're going to get people piling in. That's why I'm saying, yes, I'm treating it as a trade, as a separate trade. Now, let's look at it in 2 days' time, and we'll talk about it in the relationship to what you have and what's going on. I don't want you to have something here that you think, oh boy, this is another position. This is not another position. This is a separate position. If you treat it as another position, I'm saying, promise me you will have a stop that if it takes out today's low at worst, I wouldn't even go that far, you are out. Because I don't want you to be sitting there with something that's not working for you.
Yeah, absolutely. I forgot to mention they actually do have an earnings call on Monday, too, so that would be the next catalyst.
Oh, okay. Well, then this is a trade until then. And then I would take, if it's working, I'd take a little bit off in case it goes haywire the wrong way. And if it's holding, then it's great. You still got a position, and you've got your other positions. So let's go one step. Let's talk again in a couple of days.
Okay, thank you, Basil. Have a great day.
You too. Thank you so much for calling. So, folks, I did want to go to this. The gold, I didn't finish. The gold is about unchanged, down 1 at 1866. It's holding really well. And I think this is the area that has its own velocity that has to do with kind of market conditions, uncertainty in the world, that sort of thing, crude oil, etc. But there's also another part of it that I think traders who have now been hard hit by the sharp decline in the Bitcoin are really emigrating, and they are migrating into gold, thinking of it that way. I prefer not to. I like gold. I think it's acting well. I spoke about that about 2 weeks ago. That's why for subscribers from opening call, we are in both the gold and the GDX. What's the GDX doing? GDX, yeah, red candle, but it's had a really nice gain. Made a high to 39.89. It's now 39.33. I'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just get to this. In the Dan Basil ARWR had some important news today. Stock regained 75. Time to take a peek, I think, before we head to triple digits. I would say that I kind of agree with you. There's a rectangle formation in ARWR, that is Arrowhead Pharmaceutical Inc., trading at ARWR 74.70, up $1.65, but it's in the rectangle formation. We've seen a couple of charts with rectangle formations suddenly start to break towards the top of that. I would just say to you, if there is a not one close. It needs to be a couple of closes. 77.28 was peak C on the 30th of April. You need to see 78.50 to 79.50. A close in that area says, hey, I've now raised the base of support. I'm doing very well in the daily chart, and that means that the weekly chart has a chance to form that cup formation that we were looking at as a potential. So that was peak D top right there in the 90s, comes all the way down. Yeah, I think you're right. I would like to say the day is young. I'd like to see where it closes today, but I'd like to see it tomorrow at this time. And if tomorrow this time is trading the 75.50 or higher area, 75.25 was the high today, that's a very good sign. So yes, it is in play, but that weekly chart says there's a lot to do to get the MACD positive. A couple of things I wanted to just finish up here. So that was gold. Silver is trading down a little bit. Yep, down 0.09 at 28.26. Made a leg G/C. And look, this is how important these channel lines are. Remember, I make a big deal about this. I started off hand charting years and years ago by putting in these channels, and I discovered the ChapmanWave inside tracked repellent zone that's got into the repellent zone and it's pulled back at 28.20. I think the 27.50s is going to hold, and then there's going to be a pop into the 29s. That's where I'd start being a little careful to see how does gold and silver, how do they hold in that particular area. Question that's in about the SMHs. SMH is trading at 233.58. I should have mentioned, I don't know if I mentioned yesterday, we're still short from the 253.21 area on the 26th of April. Took a little bit off at 226 for a 10% gain. Yeah, it's trying to rally. It's looking very weak. I think that this is a pattern in my mind. I'm saying to myself, what was the chart that was just the perfect example of the rectangle formation that doesn't go peak ABCD in the prime chart, but in a shorter period it does. And look, this went to 258.59 was the all-time high in the semiconductor index, plummets down to the 216s, I think it was, 216s, pops up, and what's my rule of the rectangle formation? It can go just under, right on, or just above the previous high. Then if it pulls back 1/3 or more, be careful because it could really test the low. And here it is. And it had ChapmanWave Roman candle. This is going to be very interesting. And it has traded underneath the halfway point, but is holding quite well considering. So on a daily basis, let me see. Yeah, it was just intraday, it just went there for a brief period. So if the semiconductor at any point this week closes under 229, all I'm going to say is be really careful because it could go test the 222 level very, very quickly. So that is the SMHs. I want you to look at the dollar. Yep, the dollar, have a look. The dollar is trading underneath the ChapmanWave falling axe formation. This is the inverse. Wow, these patterns just keep repeating over and over and over. So what we're looking at here is, this is the pattern we always look at. This is the falling axe with lower highs and much lower lows, and it forms a base, and then it breaks out from the declining trend line and goes 1-to-1 to the upside, and it retests the previous high. Well, it's the same thing if you're looking at it upside down, which is this. All of a sudden, you've come down, and right here. You've come down sharply. You've made higher lows and much higher highs. And then, boom, peak D, you turn down 1/3 of the way, half of the way, boom, full give back of that particular bounce from the trend line, the rising trend line, to the much higher trend line, and you're broken under it. Be careful that, even though we're long the dollar, I'm probably going to get out of this dollar finally. 89.86, still have a little profit in it, but I think this is a terrible thing for the weekly chart of the dollar. I think that the administration, you know what's so interesting? Is that the administration basically has continued a lot of the Biden policies. I mean, all the news. Well, I don't want to go into the news because you know my impression about the news. There are no reporters anymore. They're only parrots. There are very few reporters that have the individual, the spine, the gumption to be able to report independently. Why? Because if they report independently and it doesn't fit the narrative that's desired by the media, they just won't get any jobs. They won't get any priority in interviews or anything. So you just don't hear things the way you should hear them, and that upsets me a lot. And I always quote, there've been a number of reporters going back to Bruin, right from way back in the 1930s, who even though you know their bias, their particular bias, they still did some pretty darn good reporting on both sides of the coin, and you're just not getting that. So I'm looking at this and I say, wow, isn't that interesting? The reason why I got into this whole thing right now is because I think that the Biden philosophy for the dollar is the same. Just let it hang out. We're not going to touch the dollar. Let it go where it goes. So we'll see what happens here. But this is not a good sign. This is weekly chart right now. I'd be real careful. Let me just look at the EUR USD. I've got a bunch of questions coming in, and I haven't got to them yet. Nice move up. I got a feeling this is not an old leg F, but a brand new leg B in the euro-dollar currency pair. So I'm going to put F. That's conservative. B is more aggressive. My favoring right now, I need to wait 3 days to see whether or not at 1.221, up 0.005, the euro is going to be able to sustain the move. But I think the monthly chart is going to go to leg C, and the weekly chart, this is a fresh leg A to the upside, I believe. And look, the MACD weekly, the week's young. Oh, not even 1.5 days into the new week. So let's just wait. Euro's looking very good. USD JPY is probably pulling back a little bit, and it's more than a little bit, and it's got a fading pattern. So be careful if you're along the dollar. I don't see it, even though I would love to love the dollar. I can't right now. It's just telling me that things are not great. Okay, question about Baidu. So I'm not going to say whether I'm long or I'm short. No, we don't even have Baidu. I haven't liked Baidu for a long time. I'm not going to give an assessment as if someone has it. I'm going to give an assessment as if this is fresh. What would I do? I would definitely not be buying Baidu. I don't like Baidu. It's got the arch pattern in the weekly chart. Be real careful. I think at some point, if it breaks 182, it's at 193. It's up 4 maybe on earnings news. That's going to be bad. So I'd rather be proved wrong by saying, wow, it's at 202 right now. Isn't that fantastic? Than to say, oh, yeah, this is looking great. It's going to go much higher. I think it's got a problem, and that's just my impression right now. Oh, we've got on the line, we've got John in Philly. John, if you can hold on 1 second, we'll be right back, and we'll be talking about AMD. Okay, I've got AMD. I'll put it up, and we'll look at the chart of AMD. AMD, Advanced Micro Device. Oops, Eiffel Tower. I'll be back.
Hey there, I'm Andy Albertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, just before we go to John, I wanted to say for Baidu, I didn't see this, but the ARK, I didn't know this. ARK Investments sold all of their 4 million shares in Baidu, have 0 right now. So this person said they are short the puts. They are selling the puts. So, that on a very short-term basis, that makes a really big difference. That says that Baidu, I just want to get this out of the way because it's immediate. Baidu could be finding some kind of a base here. That's really important. I'm not so sure about the upside yet, but that 200 period repelled it, and now it's trying to find a base. But it must not close under 176 because that would be very negative. That's what the pattern looks like, but I just want you to complete that sentence. All right, John, we're looking at advanced micro devices.
Hello, Basil. Thanks for taking the call. Yes, sir. I wanted to ask you about AMD. I was prompted by your description of the SMH chart 10 minutes ago. And I noticed on that SMH chart, you have a potential rectangle pattern forming, but it doesn't appear complete. Possibly. The AMD chart is essentially the same thing, except that the rectangle pattern, the sideways pattern, seems more mature. My question: is there anything that you see in the Chapman Wave that says this is a low-risk buy right here?
I think advanced micro devices, AMD trading at 76.23, up 58 cents right now. The pattern that I'm looking at says if advanced micro devices is going to have more than just a little pop, but I'd call it a bounce because I think it's in a serious sell mode in the daily, weekly, and the monthly is about to give me a sell signal at a peak E. Perhaps tomorrow I'm going to take a little time and I'll talk about advanced micro devices in the very long term, how it goes from single digits to major, major highs. And now when I say single digits, I mean sometimes in the 3s and 7s over the decades. And then it soars. But when it makes its top, that top usually lasts quite a while. So I'm just going to say to you, John, the pattern that I'm looking at here, for a little pop, that's okay. For a really good rally, I would have to see it trade. It's a 75.32. I'd have to see it trade for a full week with 3 out of the 5 sessions way above 78, 79 is a 200-period moving average. I'd have to say in the 79s. And then I'd say to you, good. Now there's more than a rally, but more than a bounce. It could be a rally. I just have to tell you that the pattern I'm looking at says something's not right with advanced micro devices. It usually leads both up and down. And this says to me it's been in this sell mode for too long. The big rally that it had back, that's the week of the, was it December? Oh, sorry, April, the week of the 30th, where it ran from 81 to 89 and then failed to win right back that same week. It went back under the 9 and 14 period moving average. It says to me, yep, surely it's oversold and it can bounce, but I don't think there's more than a bounce right now. The way I would do anything with it, and I know that you like to either look at it as one set of rules or a second set of rules. My set of rules right now would be I would trade it and just let it go wherever it's going to go. But I would not be putting positions in thinking this is the big one. No, it hasn't made that culmination to the downside. I treat it purely as a trade. And in that particular regard, I think 75.93 is the next level of the pink line in the daily chart, the 9-period moving average, and 76.90 is the next one. So that's the way I would play it. As a trade, not as a new position for really looking out weeks to months. Hope that helps you.
I understand you completely. Thanks for reviewing that. Have a good day.
Thank you very much for calling. Let's go to our next caller. We've got. I saw it a moment ago. Yep, there it is. Mark in Fort Collins. Mark, how are you?
Good, Basil. How are you today?
I'm well until I saw what you were going to talk about.
All right. I'm in it, and I'm looking for a price target. We've talked about this before, and I'm wondering where I'm in the mid to high 3 area.
So, folks, we're looking at DSX, Diana Shipping Inc., bulk shippers. These shippers, they're the late ones. The late stage of the whole bull market is where the shippers really start to kick in, and especially with the ships being so, I mean, to build a new ship, can you imagine how long it takes, how expensive it is, and how risky it is? So this I'm calling F/B. My bias right now is to say, you know what? It's in the area that says money's coming in and it's holding support, but they are so many of the shippers have different cycles. They're not doing the same thing in bulk, if I would dare to say. So I like this very much. DSX trading at 429, up 42 cents, up 10% today. It's one of the shippers that we've been looking at for a long time in the opening call newsletter. But this is what I'd be looking at here. If it can hold into the close today, I don't want to see it close under 420. Then I'll say, oh, it's just momentary buying, and it just doesn't have that follow through. What would be fantastic if not only does it close at the high of the day, but it takes out 435, the high so far today. Why? Because in the weekly chart, that takes it so far from the base of support of the 12th of February, where the high was 378, that it turns that whole area into very, very good support. And I'd put it between 385 and 363. That would be the base of support. That, of course, would probably be close to where you got in. But I'm just saying that's the risk looking out. But I think you got this. I think you've nailed it. And a great session today, especially after yesterday, because some of the others like SB, which is still a great stock, safe bulkers, has just gone sideways. Maybe by tomorrow it suddenly spikes, trading at 393. So you can see what I mean when I'm saying they rotate through the different, what was the other one someone mentioned in the den? Where did it go? Oh, I missed it. I can't see it. There was another one, a shipper that was mentioned, and I can't find it. Scroll. Oh, there it is. Sting, STNG, another one that I had on the list. Whoa, this one's flying. This one's up 22.08, up $1.10, up 5% today. Yeah, this is acting very well. Yeah, so there's a variety of these stocks. Ship is another one that I had on the list. Look, this one's failing, $1.02. most of them are pretty low priced. Nat, of course, that's one I've spoken about for decades. Nat is actually quite well at 350 up 12 cents. So yeah, I like it very much. And all I'm going to say, stay with it, stick with your plan, you're doing very nicely. Thanks for calling.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His ChapmanWave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary ChapmanWave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah, just before we're about to wrap up for this section, you guys have got great programming. You got Fast Market, you got Larry Pesavento, you got Steve Rhodes, you got Dave White, you got Tom O'Brien. I'll be back with Tom later today. Let me just say, and check out my Opening Call, my daily newsletter. So someone just sent me a thing. Basil, do you have any long-term dividend stocks to buy? So the answer is, I was very skeptical on the, sorry, I wrote in the wrong place. I was very skeptical on the telecommunications. I love the chart of Verizon, but at that price up in the 59, almost 60 level, I thought it's just too risky, and so many people are cutting the cord. I love Comcast. I love the charts as they were moving up, and then I said not interested at all, because they are just too risky for many other reasons. And now they've got into all these other things. PG and telephone slumps down 5% today. But I said for subscribers, we are looking at, and I would have done it today, but we are looking at some like the multinational oils. I think oil is holding very well. So yes, I will be adding long-term dividend. Yes, we have Bank of America. It's a dividend stock, but it's really not. I'm treating it as a growth stock more than anything else, even though it's not in that area. I'm kind of treating that. We're in 31. It's at 42, 43 right now. That is a dividend stock, but it's a different kind of dividend stock. You're talking about the ones that really are spoken about. And yes, the answer is, Stan, I'm going to, I believe I will be adding in the next day or two something like in the other area, multinational oils. I was afraid of them before. Now I think that natural gas has been cut away. We have Middle East conflagration. I think oil is the place to be. So I will be adding. So I hope that answers your question. So the other thing I wanted to do just real quickly is that VIX index. Remember, we spoke about the VIX index. And one of the reasons why we've lightened up in our portfolios, but I am adding now very selectively, is because that VIX index going from the 28th in just one fell swoop down to the 18s, it's still high. But that is a big, that's giving the market a little bit of some edge to the upside. So don't be surprised when you see bounces to the upside.